How many times have you opened a trade and immediately after you open your trade, the market goes to hunt your stop loss, and then after that, the market quickly continues in the direction that you had anticipated beforehand? I'm sure it has happened to a lot of you, just like it happened to me when I started this journey, and I used to not understand. I used to ask myself so many times, like, why is this happening? Like, I'm doing my analysis is on point, and as soon as I open my trade, somehow the market will go to hit my stop loss, and then will continue in the direction of how way I anticipated the price to go. So this is a pure example of liquidity being at play in the markets. You analyze the market and you do everything step by step. You don't miss out on anything. You apply your risk management, your stop losses. The market goes to hit your stop loss. Thus the money is being pulled out of the market, and then shortly after that, the market will continue in the direction anticipated, and you won't understand what's going on until I show you guys what I'm about to show you guys right now. Let's go. Yo, welcome back to Vussy Max channel. You know the vibes, I'm saying. So before we go into today's video, hit the like, comment, subscribe, click the bell notification icon so you don't miss out on any future drops. You know what I'm saying? So today I'm going to show you guys the most accurate way to know the draw on liquidity when it comes to NAS100, and when such moves happen and what time exactly should you expect this. I'm also going to show you the signs that the market will leave there, you understand, before such a move comes, so that you know how to tell a real move from a fake out or a manipulation move or a stop hunt and stuff like that, you understand? So let's go into it. So we can describe liquidity as an area where a large volume of money either turns into an asset or a lot of money is being pulled out of an asset. So let me further elaborate in a way that you can understand in terms of our market language. So in simpler terms, guys, you see there's an area where we can call trading zones or key levels and stuff like that, be it double tops on the market, be it trend line breakouts and stuff like that. So these areas are areas where there's a large volume of positions waiting to be opened, and these are areas where you'll usually find your buy stops and sell stops, your pending orders and so forth. So these areas are very prone to being manipulated. Manipulation is in the sense that the market can go and hunt your stop losses, or go and hunt your pending orders and open there and quickly pull away from areas like that, you understand? So this is what we're talking about. So when the market does that, it's establishing this area as a liquidity zone.
What do you mean by that?
So you will notice that in areas of liquidity, price will move away with such violence that you won't understand what's going on until you pay attention. Because as you can see, this area, the price was spiking up, but as soon as it moves away, it moves in a very sharp movement and straight, you understand? So there was a lot of stop losses that were triggered on top there, which is why you need to give it room, which is what I'm about to elaborate on right now, you understand? And yeah, you can see the people ate. So if you guys don't want to miss out on such signals and stuff like this, go ahead, join the public telegram right now. What you need to do, you need to go to your trading view, you need to add your session breaks, right? The session breaks, I just use them because they allow me to see where the market opened every day, you understand? And I like to see movement day by day. I don't like to just paint a market as a one picture thing that's happening, you understand, a continuous cycle. I like, and as far as everything is linked in the markets, I like to see the patterns that happen day by day. So now, like, my strategy now, or my entries, or the way I trade can improve gradually over time if I look at smaller pieces to make a bigger picture, you understand? Now what you need to do, you need to include your session breaks so you can see the movement of every day, like I said. And then what you want to do now is I want you to look at equal highs and what happens at equal highs. So as you can see, my charts have these gray boxes, as you can see here. So this is London. These are my London session and New York session. So I only trade the NAS100 during New York session, you understand? So I also mark my London session and my New York session, as you can see there. So from you'll notice that before London session or during London session, the market will make a high, you understand? And we're going to mark this as HOD. You understand? This is our high of the day, our HOD. So as you can see, the market made our high of the day, but we also need to understand where the market was coming from, right? So the market, where it was coming from, it was a previous day low. You understand? This was the previous day low. So we're going to call it the PDL. This was our previous day low, as you can see. So now we are trading in between our previous day low and our high of the day. You understand? So what we need to do, we need to simply extend this line, right? Just extend it until there. And this is before all this movement. Once we come from our high of the day, because we made our high of the day, and then the market moved down to where? To our previous day low. And once we came to the previous day low, can you see how fast the market moved away from this area? You understand? I'm on the 15 minutes time frame. This really requires 15 minutes time frame or 30 minutes time frame. Entries, you'll find them on the M5. You understand? So you notice that the market goes to the previous day low, and then it makes contact and quickly moves away from there, right? So as the market moves away from there, we can see this is during a London session. So usually I wouldn't even go for trades. I don't like trading in London session, right? I find the most success when I trade in the New York session, right? So if the market moves to a high of the day or previous day low or low of the day, something is bound to happen. You are bound to see a reaction before you enter the market, right? So this is one of my principles. Don't enter unless you see manipulation. So this is actually my principle, you understand? Don't enter unless you see a manipulation or a spike. So you see how the price came to this zone here, but we don't have a spike. You understand? We don't have a spike. Perhaps if the market came and left a candlestick like this, then it would mean it gave us a spike downwards. You understand? I know it looks like a cross, but I'm trying to draw a candlestick. So if the market came and left us with a spike like this, then it would mean we've got our spike. So I can enter, I can look for buys. You understand? If the market goes to an area, either a high of the day or low of the day, or previous day low or previous day high, and it leaves a spike, and if it leaves a spike and then it quickly goes back below that line or above that line, then it means the market, well, in this case, if the price moves back above that line, then it means now we can start to look for positions buying, and our targets, we leave them where? At the next line that we have, which is the high of the day. So we came here, but we didn't leave a spike. So that's why I was like, nah, I'm not gonna enter here. From this video has been made possible by Supreme Traders. You understand? Supreme Traders Academy is actually our company where we help people trade, become profitable and stuff like that. You know what I'm saying? So for all your trading needs, fam, for all your trading needs, I got you covered. We got you covered, actually. You understand? Go to our website. The full course is out right now. You know what I'm saying? NAS100 and US30 course is out, official. You understand? Just go there, click on it. It's going to show you everything that's on the course, detailed trading tutorials, access to our lifetime mentorship group, and VIP signals, lifetime access. You understand? 24 hours access to the content. Video content, you understand? So you can access the videos anytime, anywhere, and you can watch it over and over and over. You understand? For a period of 1 year. Access to trading strategies, beginner to advanced level coaching. You understand? We got you, my nigga. And the content is there, it's ready for you to get started on a trading journey and have the biggest month of your life. You understand? Click a link in the description box below. Let's get it. But now I had to watch the market, what it's about to do next. So as we can see, the market moves up, and now this is New York session. And at New York session, you see what happens. The market goes there, and then what happens? We do see a spike. So once we see a spike and the price quickly comes back down, I know my scenario now is what? Is valid. You understand? So now that it's valid, I can start looking for my selling signals. So once I'm looking for selling signals now, my targets can be there, but if I use a really good lot size, I can have a 1-to-1 like I did here. So I can't find the entries on M15, so I have to go to what? I have to go to M5. So as I go to my M5, I have this two line that you can see here, because I was trying to emphasize that the price, no matter what it does not close here. You understand? I had this zone here because price was failing to close outside of this zone. Should price actually, a candlestick actually close above this zone that I just showed you guys now, then I was gonna know my position is, you know what, violated. So the thing about entering here, as you can see, this is where I entered. I'm gonna show you guys in the 1 minute time frame. As you can see, this is exactly where I entered. You see this candlestick, once it started moving down here, this is where I opened my thing. This is why I opened my sell, because it just validated that the spike, you understand. And then now I knew that if the price closes above here on the M5, my position will be violated. And you can't put your stop loss here now because it's gonna get manipulated, obvious, liquidated. But you have to look at the external liquidity part of the candlestick. You can't just keep your stop losses very tight. You have to actually allow them to breathe here. You have to look at the high of that spike and put at least your stop loss, put it a few pips away from the high of that spike. Now you go back to your M5. So as you can see, guys, with my stop loss, it was just well above, slightly above the candlestick spike, the high of that candlestick. That's why I left it a few pips. And we can verify from that signal that was sent, and I did show earlier that the price now is going to officially move down, and you can see the spikes. So this was a very, 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 very beautiful trade, you understand. So at the same time now, I try to not be greedy, my people. I try to not be greedy. I don't target all this move, but I make sure I press in as far as my lot size goes. So remember, guys, don't enter unless you see a spike. So we're going to move away from this example and then go to previous days, because this actually happens every day, you understand. It happens day by day. So we're going to go back to our M15 and see if we can find more examples of a scenario like this, you understand. And you'll see that once it moves away from that spike, it's going to maintain the same direction for quite a long time. So now we're going to look at the day before, and we're still on the NAS100 M15. But now this movement is quite a bit hectic, but it's only visible on the M5, which is what I'm going to show you now. So as you can see, from where the market opened, it opened after such a strong buy, a strong bullish momentum. So we can't really say we have a high of the day because we quickly broke that, and then we made a new high. Because we have to look, guys, for you to consider it a high of the day, you have to look at during London session or before London session. That's where you'll find your high of the days, you understand. So if there's a high that's made during London session, then we can't consider anything else before that to be our high of the day. So now this becomes our high of the day. And then once we are there, right, once we are there, we have to also look at places of equal lows and equal highs. Those are key levels, you understand. So this line that we have here, it's equal lows. This is our equal lows here. This is why we have this line. It's important to note these things. So during London now, what happens? During London we go, but we miss. We don't make contact. This is why I'm saying, guys, I don't trade during London session, because you will realize that even if we make contact during London session, you'll rarely see a spike to confirm the movement. But now during NY, let's see, there wasn't a level there, but the market went to make a new low there, but it didn't come back to test this low, which is why it didn't really give me a position to enter for a buy, you understand. Sometimes it's important to know that if the market isn't giving you what you want, you can just quickly walk away, you understand. So the market comes here, it makes a spike, and then it quickly moves away. But there's a lot of manipulation here. There's a lot of manipulation, and you can see the way this thing is moving. It's not really operating the things. So now when the market comes here, this becomes our new low of the day. It's a simple game of waiting for your turn. So as you can see, the market comes to spike where it comes to spike here. You understand? The market comes to spike here at our new high of the day. The market comes to spike at our new high of the day. So now this is where we start to look for sells, you understand. So if we can, that means we have to go to our M1 to actually find a sell position, and I want to confirm if we will find one. So as you can see, after seeing this candlestick on the M1 do a spike like that at our high of the day, as you can see here, even if you open your SL, even if you open your trade here below and you keep your SL just slightly above the thing and you go for a 1-to-1 ratio. Sometimes, guys, thing is, you see this thing of targeting the bottom of the movement, I don't like it, because sometimes the market will move against it's going to move against your position eventually, You understand? And then it's going to go back down. But even if you did, it didn't come to hit your stop loss. It still maintains the same direction, which is what I'm telling you. I just don't like going into profits and then going into drawdown close to stop losses and then profits again. So, which is why I find it good when you target your one-to-one. Your one-to-one is gonna hit very quick, guys. Just focus on the just focus on the lot size to maximize your profits, and then you will see that you'll hit one-to-one almost every time. You understand? This is a very, 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 very high probability trading right here. You only get quality setups here. And the NFP that we hit also last time, I got it because of this way of trading, and I want to look for that movement so I can show you guys. So even if you can look here, there was a movement. The day opened. This is another day's movement, guys. These are just the trades I take, and I just keep a record on my trading view. So as you can see, the market opened where? Market opened here. Right? Our open was actually a low also, a low of the day, right? Because our low of the day came to manipulate here during London. So you could look for your buy positions because you see a spike. Because remember what we say is if you see a spike and then the market goes back, then you can now look for your trades. So sometimes in London, you will see those. It's just that I don't find them as often as I would like. So that's why I just end up not even taking trades. But yeah, there was a level here. The market came to retest. And then you can have your buys. As the market comes to this zone here, you can have your buys. And then you keep your stop loss. And then you go for one-to-one. You can still enter. You understand? You can still enter and still kill it. And then it comes to your NY session now. NY session, I make sure I don't miss it by any chance. So you see the market here, there was a spike because I think there was a previous high there. You understand? So this was the high from the previous day. So I think we should draw it so you guys can see the application of how this thing goes. So this is our PDL previous day, PDH previous day high. You understand? So as you can see now, the market comes and what? The market comes and spikes there. But as it spiked there, I don't think I managed to get this trade. You understand? I didn't catch this trade. I actually allowed the market a little bit room to move because I felt like it was going to come back to test the zone. I had this high, candlestick high there. It's not the high of the it's actually, this is not the high of the spike per se, but the body of the candlesticks here. This is what I was focusing on. The candlestick bodies were actually closing around this area, so I just marked it out to see if the market sometimes will come and turn here, and then so I don't miss a trade. So the market came back for the second time, and then you have to keep your stop loss outside the external liquidity, which is what I did. So you keep your trade one-to-one. You'll see that fast. You're going to go and hit your TP very quick. You understand? Sometimes you get two trades. I don't really focus too much on that. You understand? I don't really focus too much on that. But yeah, you will see that equal lows and equal highs. And if you see a spike there, just know that the market is going to move away from that area real quick. So what you need to know, you just need to find your trading signals in the opposite direction of the spike. So if we were trading in a range here, as you can see, I marked it out, trading in a range, and then come New York session, we had a spike. This is our spike. And then after we had the spike, once the market came back, that's where now when the market went out of the spike, that's where now I actually hit, because I could have entered down there, but I actually missed the trade. But because I knew the market is going to move away from the spike, which is our buy area or bullish momentum, then I know if I'm going to enter late, that means I have to open up my stop loss to almost outside liquidity and then reduce my risk, my lot sizing, because now this is a very big move. So I can't use the same lot size if I know that I entered the move late when I should have entered down there. But it still played out well, and I knew it was going to cover the weekend gap. There was a weekend gap here, so I was targeting my TP was just a weekend gap. You understand? We go back before that. There was a NFP. So the NFP was this move. I sent a signal to sell, as you can see here. And if you go to my public Telegram, you'll see all these things. But there was a previous day high. Previous day high was here, our PDH. So as you can see, our PDH, the market goes to spike at the PDH, comes back, and then now we can look for what? We can look for our selling. And it did the spike during London session, so I wasn't there to find the trade. But now I actually found a little zone there during NY session, And the more we kept testing it and closing below it, then I opened my sell, and then the NFP came. Then it took the price way down there. That's the trade that made us that's a trade that made us close to 100k, as you can see. So yeah, fam, this is just a repeat of the same thing over and over again. But like I said, most strategies are in my full course. Link is in the bio. Also go to my Telegram to find signals like this, you understand? So fam, I hope now you know the importance of liquidity and also trading in the right trading sessions. Sessions have to do everything with liquidity and also market manipulation and stuff like that. These things don't just happen at any time, and these things don't happen by mistake. These things are very direct and very deliberate, you understand? So if you can focus on this, I'm telling you, you'll come back in my comment section in a few weeks and you tell me how great you're doing or how great your trading has improved and stuff like that. So it's your boy Vussy Max in the building. We're dropping bangers only from now on, you know what I'm saying? See you guys in the next one. Peace out.